In this part of the online course, I will talk about the scalping strategy, and I will show you guys in the same way I did in the first two strategies, all the underlying dynamics of the scalping strategy. I know that the preset is different right now. That's for one reason, because in the real trading, what I do is I look at the trend panel, but this time, because I am backtesting, I cannot look at what happened, because what I can see here is the actual, what is happening now, right now on the charts in terms of the trend. But if I look back, and this is the 24th of August, for example, I cannot know what had happened in terms of the trend. So that is why I am using the smart trailing stop here. That will guide me and show me to a certain extent what the trend is doing. Because even if it is a scalping strategy, you still have to combine it with some sense of direction. You have to know where are you going, right? So you start your car and you don't know where you're going. That does not really make much of a sense to me. So I always need to know where I'm going before I even get into the car. That is why I always use a bias in a direction, even if I am working on a small time frames. So the time frame that I do use typically is the 5 minutes, but you are free to use the 1 minute, you are free to use the 10 minute. You cannot really scalp much on the 15 minutes because that is a higher time frame, but 10 minutes is still somewhat a good time frame if you are the kind of people that does not really like the fast movement of the price. But if you like more action and you are into like fast closing and fast taking profits and fast stop losses, then you can do 1 minute. But I find that personally, from a personal perspective, in my personality, it really does not go with the 1 minute, and the 5 minutes is somewhat what I find myself very comfortable at. So without further ado, guys, as I said, I will lie down the rules first and let you understand the rules of the strategy, and then later on I'll start backtesting the strategy from this time line here, the 24th of August, and we'll go through the chart, finding other trades and going through different scenarios and how I will deal with each and every scenario that comes up. That is, I think, the best way to teach you guys how I go about this strategy. So as I said, first of all, the first rule here is that you need to choose a bias. Now, if I'm trading on the 5 minutes here, this is the 5 minutes time frame, I am in an urgent need to know what is going on the 10 minutes time frame and the 15 minutes time frame, probably sometimes on the 30 minutes time frame. But I don't care much about these 20 and 12 and 6 and 4 and 3 and 2. They don't really say much in terms of the trend, even if they oppose the trend. Sometimes I don't take them in consideration. So what I really like to do is 2 or 3 time frames above the actual time frame where I trade. Like, for example, here I'm doing the 5 minutes, so I care about the M10 and M15. So for example, if I'm getting a down signal here, if I'm getting a down signal, so I need to check if the trend on the M10 and M15 is confirming the trend to the downside. In other words, it has to show a red down. That is going to be a second confirmation for me to go short. Knowing that the smart trend breakout catcher has given me a signal to the downside, or a sell signal to the downside in the form of this arrow right here. So for this explanation, and for the sake of explanation, I'm using the smart trailing stop, and I think it is also a good idea to add it into the chart just as a confirmation bias. So use it in confluence also with the trend here that is shown on the multi-time frame trend panel. So you would have a double confirmation as well. So what I will do is I will, for now, replace the panel as if it already gives me like a confirmation, and I will just replace the panel with the smart trailing stop. And how do I use the smart trailing stop here is that I use the color as the bias. So I have a green color here and I have a red color here. So what I do is, if I'm getting a down signal below the red color, and you have to be very straightforward about this one, there's no technical analysis. This is the systematic trading. You don't need much of the technical analysis. That's why it's straightforward. It uses colors, it uses this stuff, indicators. This is systematic trading. If you are more interested into technical analysis and you want to understand how the price action moves and all that stuff, there is another system that I'm working on. It's called the Smart Support and Resistance Trading System. That is going to use support and resistance. It's also going to use candlestick patterns in a couple of other things that are not systematic, and that have the nature of technical analysis, and that have all related to the price action. There's no almost a little systematic trading mixed up with a lot of technical analysis and price action. So that is for me like version 2.0. This is V 1.0, where it's the fundamental basics of trading, where you build the understanding of trading, you build the understanding of how to take the trade, how to enter the trade, how to look at the chart, get familiarize yourself with all these aspects of the chart, and you go further one step ahead by understanding the price action. And I think that is really something that will help you in the long run. As I always say, knowledge is power, and you have to always learn new things, not get stagnated in one place and learn only one thing. And probably there's a better thing out there, and you just need to open up to that thing, and you will find better opportunities. But I'm not saying that this system does not work. It works, but there are a lot of people with different personalities. There are a lot of people that are ambitious and they want to learn more. So if you are one of the people that you like systematic trading and all that stuff, and you also like this kind of price action trading and price action concepts and all that stuff, there is also another system that I'm working on, and you are welcome to explore that as well. So without a lot of talking, guys, let's get back to this system. As I said, we have two colors that will replace the multi-time frame panel: the red color and the green color. So whenever the price is below the red and I get a sell signal, I need that's a good signal for me to enter a sell trade. But whenever the color is green and I get a buy signal above the green, that is a good signal for me to take. So for me, the bias here, or the direction, is the color of the smart trailing stop. So what I will do is I will start from here, and I'll go through the chart, and I'll show you guys how to go about this kind of trade. So let's get started at this level. So the first thing I have to locate here, knowing that I'm not using the multi-time frame panel, is the color of the smart trailing stop. I can see that the color here is red all the way. So that gives me a confirmation and gives me a directional bias to the downside. So whenever I get a sell signal, I'm taking it. Whenever I get a buy signal, I'm ignoring it. So as you can see, guys, here I got a buy signal here first. So right after that, I get the signal, and that's where I get the signal right here at this arrow. That is going to be my entry right there. As simple as that. So I'm entering there. I'm putting my stop loss right above the previous high. That's a lower high, not this one here, a lower high, so that my stop loss is going to be as tight as possible. This is scalping. You're not looking for a lot of peps. You are looking for 1 to 1.5, by the way. So that's something that I should have mentioned in the beginning, but it's never too late. So this is where I will enter. This is where my stop loss in this lower high here will go, and my take profit is going to go at 1 to 1.5, no more than that. Now there is one more catch here. Whenever I get to 1-to-1 risk to reward ratio, which means that whenever I get the same distance as my stop loss in profit, I'm moving my stop loss to break even. This is scalping. You cannot scalp unless if you do this stuff. It's very important. I cannot stress enough that if you don't do this stuff, you are going to be finding a lot of troubles, right? So this ended up to be a good trade and a winning trade. That's 1.5%. Moving on to the next signal, I got a buy signal here, but I am going down, right? So I'm not taking that. I'm ignoring that. I got the next signal, and I'm entering right there. I'm putting my stop loss above the previous high, which is right about that level. And as you can see, guys, I have been taken out with a loss, and that is fine because I'm gonna still keep looking for other trades. Right at this level here, I am above the green, but the signal that I got here is below. So I'm not taking any signals in the red, any buy signals in the red. I'm taking buy signals in the green and sell signals in the red. So moving on, I got a sell signal here. I got the buy here, ignored. Sell signal at this level right here. My stop loss is going to be above here. So at 1-to-1 risk to reward ratio, remember, guys, I'm moving my stop loss to break even. And if I did not get that 1 to 1.5 here, the price comes back and takes me with a break even. So I am a break even at that point of time. At this point here, I got this sell signal, but I have a green color here, so I'm ignoring that. I got a buy, ignored. I got a sell here, so I'm entering at that sell, putting my stop loss above here, and my take profit at 1 to 1.5, which I have gotten here at this level. And by the way, if you are very comfortable with trailing your stop, you can trail your stop, but make sure that you get into that zone of risk free first. So if, for example, if you enter here, your stop loss is here. Once you get at 1-to-1 risk to reward ratio, you move your stop loss to break even. All right. So now you moved your stop loss to break even. If you don't want to take profit at 1 and 1.5, what you do is you start trailing your stop using the smart trailing stop. And now you are going to ride that small trend to the downside up until this level. So this is going to be from here, and that's your entry. From there, that's 5 pips or 6 pips to up to this level here, which is 17. Now from 5 to 17, that's 3 times. So now you got 3% at this point here. And that's another way to squeeze maximum profit whenever, even if you are scalping, if you do it right, you can do it right. So we are here red. You have to zoom in to see this color here in the line. So I'm not taking this buy. I got a sell here. I'm still green. I got a buy here, but that's not something that I would want to take. Same thing here. I am green and I am green and I got this sell. And here I am red and I got a buy sell. So this analogy, what will happen in the long term, when you use this strategy more and more, you're going to find that this analogy of the colors, following the colors and not buying when it's red and not selling when it's green, is going to end up, highlighting you a zone where it's a tight range where there's no move. It's fine to trade in a range when you are trading this scalping strategy, because in any way you are not riding a trend or anything like that. But in a tight range, that is going to take your stop loss again and again. That's not going to do much for you, just taking your stop loss every time you enter. But with this analogy, what is going to happen is that you will find out that this kind of thought process is going to save you from this tight ranges, which you don't want to trade at. Moving on to this one here, I'm green and I'm entering at this level, putting my stop loss right there. That's a 1-to-1 risk to reward ratio. I have moved my stop loss to the break even and I am risk free at that point, so that is a break even. I got a sell signal here, but I'm green, so that is to be ignored as well. I got a buy signal here, but I am red, so that's something to be ignored as well. I got a sell here, but I'm green again. That is something to be ignored. Here, that is something to be ignored. Same thing here, because I'm still green, as you can see here, guys. That's something also to be ignored. Moving on, I got this buy signal here. And that's an entry for me. I'll enter right there, put my stop loss right about this level, and I'll get a 1-to-1 risk to reward ratio about that level right there. And I got another entry right at that level here. My stop loss is going to go here, and I am going to get that 1.5 right there. And I got another entry here. My stop loss is going right there, and I'm going to get that 1 to 1.5 right about that level. So this kind of moves is favorable when it's like the price is moving an impulse move, because if you go to a higher time frame, for example to the M30 or 1 hour, you're going to see that this move is one impulsive move. It's just a couple of big candles to the upside. That's what you're maximizing in day trading. I got a sell signal here, but I'm green. I got a buy signal here, but I'm red. Same thing, sell signal, but I'm green. And here I got red, and I got a sell signal here. So I'm taking that one and moving my stop loss to break even. I might get a loss or a break even in that one here. So I'm not taking this one. It's a buy. I'm taking this sell. The same thing. It's either I am at break even or I am taken out with a loss. Moving on, I am still here. This one actually is, yeah, it's red color, so not taking that one. And I'm taking this one here. My stop loss is going to go below here, so that's end up to be working trade. And I'm taking that one here at 1-to-1 to risk reward ratio. I'm moving my stop loss to break even, or the price moves back and takes me out with a loss right there. This one here, that's an entry again. My stop loss is going to go below here. That's about 1 to 1.5. That's 1.5%. This one here, I'm entering right there, putting my stop loss right there. By the time the price reaches this level, I am already in break even, and that's something you have to get used to. You put your stop loss at break even, the price comes back and take you out. Moving on with this same analogy, I didn't get anything here, nothing here. I got a sell signal here. I'm red, so I am entering at this level where I got the signal. My stop loss is going right about this level, and my take profit at 1 to 1.5. That is plus 1.5%. I am red here, and by the way, if you are using the multi-time frame panel, you might get a different idea here. Probably the price is high, so that once the price moves higher, you might get uptrend in both of them, which gives you a buy signal here that you might take. But for now, let's keep using the trailing stop, the smart trailing stop. So it's right here, so I'm not entering in that point. Even if the price broke above that, it still does not mean anything. It might reverse to the downside. Moving on, I got a sell signal here to be ignored because I'm green again. I got a buy signal and I'm green, so I'm taking that one here, my stop loss here. That's a very quick 1 to 1.5 in like 15 minutes. That's really something that you want to look at. So if you are really good, now the thing is, I'm showing you how to use it, but I'm trying to make it a lot more simpler than it is, right? But if you learn how to use it and you learn how to do it and you are doing it every day, and you build the habit of looking at the chart and finding trades like this one here, where you enter, you put your stop loss right there, and it's a perfect trade. It's just perfect, smooth, butter. That's something that you will learn with the time, with the practice. And I'm not saying that these things are going to happen all the time, but at least if you get the habit to finding stuff like this, you are going to be in a better place in the long term. Moving on, guys, without a lot of talking, this is going to be the next one. As I said, if you enter right there, you put your stop loss right there. That's 1 to 1.5, and that's another 1.5. Right? That's two back-to-back trades. Now I am a green here, and I got this red signal, a sell signal. I'm not taking it. I'm not taking that. I'm not taking that. I'm not taking that. So moving on. moving on here, I'm red here, I got that signal. Below here, I'm taking this one, my stop loss is a little bit higher, so this might have been a break even though the price moved in my favor pretty good. So I'm entering at that level where I get the signal. My stop loss is going to be above here, and probably that's 1 to 1.5. If not, the price will come back and takes you with a break even. But as a rule of thumb here, a tip that I want to give you, whenever you put your stop loss in break even, put it at break even plus 1 point to cover the commission and the spread. Cover the commission and the spread. Remember that. Moving on in the chart, I am green here, so I'm taking this one right there, and which turns out to be a good trade. So remember, guys, when I told you that the stop loss is going to be at the lower high or the higher low. So this one is a lower low, this one is a higher low. So my stop loss is going below this one, and there's no need to put it here. If you put it here, it's just extending the time of the trade to work. As long as the price gives you this this pullback or this small retracement, you need to take advantage of that. Putting my stop loss right below there, I'm entering right there, and I got that 1 to 1.5 really quickly. So that's one good trade as well. I got another signal here, which is going to be a loss. So I'm entering here, my stop loss here, the price reverses. That is fine. I got another signal here. My stop loss is going to be here below because the price did not give me that lower high. So I'm not putting my stop loss any higher. I'm putting my stop loss right there. But the price here favors us and moves all the way up, which gives me a lot more than 1 to 1.5. Now, if you want to also, as I said before, if you want, there are a lot of things here. This is a system that is complicated. It has a lot of things that you need to take in advantage or take advantage of. Sorry. So, as I said before, you can trail your stop with the smart trailing stop until up to this level. You can use the exit at the opposite signal, which can give you a higher profit here, or you can choose a take profit at the change of color, which can give you a profit a little bit higher than that. So this is the 1 to 1.5 profit. This one is the opposite signal. This one is the trailing stop, which will happen to stop you right about this level when the price reverses. This is the opposite signal right there. And this one here is the change of color. So you have all these variations of taking profits, and the only thing that you need to do is to backtest, learn, practice, and you will end up finding the best combination that suits your personality. Because always remember, my personality is totally different than any other person's personality. It's completely like the fingerprint. We all have different fingerprints, and my fingerprint is totally different than yours. My personality is totally different than yours. What makes me comfortable when I'm looking at the chart does not probably or necessarily will make you comfortable looking at the chart. So you have your own things, but the tool is still universal and something that everybody can use and can take advantage of. So this is an invitation from me, to take advantage of the tool and practice, learn how to use it, use the whole thing, the whole system. Not only this, the other system, the other combinations, maybe you will find a better combination that works best for you. Now, this is just an example. Taking profit at 1 in 1.5 is what happens to be working for me. And that's why I'm sharing with you. I'm not here to hide stuff or anything like that. But I find that 1 to 1.5 happens to be the sweet spot and the spot where everything lines up to take profit quickly for me. But probably you are the type of people, or the type of people that likes to ride the trend, even if it's small, even if it's a scalping style, and you will take profit here. Now this is a whole 1% in your side, or probably here that's another 1% if you look at it. So here from 1.5 you might get 3% or something like that. Go on and on and on and on, showing you guys all these trades and all that stuff. But I want you to take away here one thing. Make sure that when you are trading, you are lining up and you are using the confluence of the multi-time frame panel. You are trading with a bias or with a direction, and you are always using stop loss. You are always using take profit, and also you are doing that break-even thing that I showed you, and a break-even plus 1 point. These are all the advices that I can give you right now. So with this trade, I'm gonna leave you guys to it, and I wish you good luck in your trading. But before I end this video, I want to show you guys a trick for the people who don't like to get the alerts and they find the alerts really annoying. What you can do is you can go to the settings and you can go to the alerts of every indicator and just turn them off. I'll give an example here of the multi-time frame trend. So you locate the multi-time frame trend, you go down here to the alerts and you turn that to off or false, and you will not get any alerts from that. You can also do the same thing for the rest of the indicators. That's something to keep in mind. And with that, I will leave you guys to it, and see you in the next videos where I will share with you more systems, more trading system, more trading ideas. Stay tuned, take care of yourself, and good trading.